So, welcome to another episode again. As always, we start out by looking at the economic calendar, and as you can see, we have most of the news of the week in the New York session of the upcoming days. We have no news on Monday, so again, we also don't have end of P week. So, this week we will again skip Monday and we will then look for trades from Tuesday to Friday, and we obviously want to keep in mind that the majority of news are being placed in the New York session of the respective days, right? So last week we have been trading into this daily swing high buy side liquidity pool, right? And then on Friday we had the sell off right here. And if we take a look where we are trading right now on the weekly, we previously have marked out this old weekly fair value gap, which is now an inversion fair value gap, right? And we now want to see price using this fair value gap as support to then see higher prices and aiming for those equal highs here. And on Friday we also got the sell off into this level here after we have taken out the buy side previously, right? And you can see also that we have closed below this bearish order block again, so we managed to trade above to take out the buy side, but then once we have taken out the buy side we then closed below again, so now this is a reclaimed bearish order block, right? And we then, as you can see, have used this and sold off into the weekly inversion fair value gap, which is also aligning. If we take the standard deviations again, you can see that we again trade perfectly right between the 4th and the 4.5 standard deviation, and we also are now trading in this bullish order block right here. So as always, we now want to let Monday's range play out, right, to get more ideas for what might be the weekly profile, what price action can we expect in the coming days. And there you can see we also have a weekly opening gap, right? We closed here, then we opened up here, so we have a weekly opening gap here as well to the upside. And now we want to see how Monday's price action is trading, right? So we wait for the Monday daily close, and there we go. And if we take a look at the daily chart, you can see that we had a consolidation daily profile, right? So I'm saying it again, most of times Monday will be a consolidation or retracement profile against the higher time frame order flow, right? So therefore you really want to be picky with the Mondays you want to trade and the Mondays you don't want to trade, right? And as you can see, we got a retracement back into this fair value gap, and we then have been consolidating here on Monday. And now we want to see what the Tuesday's Asia session is doing to then potentially look for longs during the London session. We have those low resistance highs here, right? We have those right here, so they also are aligning with this reclaimed bearish daily order block, right? They are also Asian highs, so again we combine price-based liquidity with time-based liquidity, so we have Friday highs and Asia highs here combined with a low resistance liquidity run here. And we also have inside the reclaimed bearish order block, we also have the small H1 fair value gap here, right? So this could potentially be a short-term drawn liquidity before we then get rejected again from this daily bearish order block, or we can get back above again and then look for higher prices, aiming for the 1.11 area. So we have Asia here now for Tuesday, and we want to see what the Asian price action is doing, right? So we can see we had an external rate on liquidity, right? We have taken out this H1 swing low, and then we saw displacement to the upside, right? So now we want to wait for the London kill zone to start, right? And there we have the London open, and now we want to think about again what is the narrative for a London session if we have an external liquidity rate and displacement during Asia, and we are aligned with the higher time frame order flow, right? With a daily bullish order flow, we have a drawn liquidity. So in this case, we want to anticipate London session to be a continuation of the Asian move, right? We don't anticipate price to trade below the Asian lows. We have the New York midnight opening price here, right? And you can also see that we have those flat candles here, right? If we have flat candles, price often tends to trade below those lows again. And you can also see we have an H1 fair value gap here as well, right? So we have a higher time frame POI. So again, if we go over the protocol again, step 1, the market conditions we have talked about. And now to step 2, the bias. We stick to the daily order flow. We have a weekly or daily bullish bias, and we also currently having a lower time frame or a middle time frame bullish order flow, right? So we want to go with that. And then the third step, the narrative, right? We have first of all the session narrative, right? We have the Asia rate on external liquidity, followed by a change in order flow and then displacement, right? So we have now also the most likely narrative for the London session will be the London continuation, and as you can see, we have also retraced into the discount of this Asian range here, right? We have Asia low, Asia high, and you can see we have been trading in discount into this H1 PD array, namely the H1 fair value gap. And also in the protocol, I told you if we anticipate a London continuation, we try to get into a trade pretty much in the first hour of the session, right? So we can technically get into a trade right after the session open. If we trade a reversal, we want to wait for the first hour to make the manipulation and then look for an entry, right? But in this case, we can look for an entry quite early in the session. So we have talking about the time-based narrative, right, which is the London continuation, and now let's see if we also can see a price-based narrative here. We potentially could say, okay, we have a market maker model here, we have a smart money reversal here, we have the original consolidation highs right here, which are resting right below this reclaimed bearish order block, right? And we possibly could see a move into those highs here, right? So let's go on to the M5, and we can see that on the M5 we also have now a change in order flow here, right? We have taken out the sell side, so this low, which has also created the fair value gap. We have swept that low, and now you can see we have a bearish propulsion block right here, which we have closed above. So we have changed order flow here, and you can see we've also closed above this entire bearish value gap. So we have disrespected two PD arrays here, and if we compare the candle bodies, right, so if you only take a look at the wicks here, then you would say, okay, we have a raid here, but take a look at the candle bodies, right? You can see we have the candle body right here, and then we have this candle body closing right above. If you struggle with reading that, you can also use the line chart, and you can see how we have a market structure break here, right? So if you have difficulties with reading like the bodies and you want to have a more clear picture, you can also use the line chart if you feel more comfortable doing that. So we have changed order flow, and now we can already look to get into a trade, right? You can either market long here, or we can aim for maybe a limit entry at the top of this mitigation block here, right? So the former propulsion block, once we closed above, is now a mitigation block, right? And we put our stops below the low here, London lows, and we are then aiming for the high here, right? So in this case you would get like almost a 6R trade. You can technically also take some partials at the Asian highs, right, which would then only give you in 1.885 R trade. But yeah, you can take some partials here, or you can take partials all the way up, but our higher time frame drawn liquidity are those equal highs here, right? So now you can see we trade right into the upper half of this mitigation block, and now we want to see price expanding here. We also have a small fair value gap right here. Ideally we close above and then trade higher, right? So something like that. And then we go for the highs, take out those highs, then the Asian highs right here, and then ultimately our higher time frame target, right? And as you can see, we close above the fair value gap here, right? And now you can see how we perfectly use the equilibrium of this inversion fair value gap and flip it to a bullish support level and then expand higher, right? And again, we also have belonging below the New York Open, right? In the protocol, it says that if we are bullish, we always want to ideally try to long below the New York Open if we trade during London session, right? So we take out those low resistance highs here, then we get a retracement one more time back into this fair value gap, but as you can see we instantly expand higher from here, and we are now also trading above the Asian highs. If we fail to close above here and we see a rejection, then I would put my stops to break even, as then we probably could see another run lower into this fair value gap here, right? But as long as we can hold above this level, and as long as we respect this propulsion block here, right, which is at those two down close candles here, right? We have an order block here, we have those candles trading into this order block, then expanding higher, so this is a propulsion block, and this should ideally act as support, right? We don't want to see prices trade below, so we could at this point move our stops to break even, right, to be risk free. So we have London session here now, and you can see we almost trade into this propulsion block. We also have a small volume imbalance resting right above, which we have been tagging right here, and we can now consolidate a bit here, and now we have London session or London Open session close here, and we are about to enter into the New York or London lunch ahead of the New York Open, right? So we trade into the propulsion block, but as you can see, we put most of our focus onto the candle closes, and you can see we are respecting the upper half of this propulsion block here, right? And as you can see, the purple line, which is the New York opening price, is also being respected here, right? So again, you could have taken some partials here at like 3R, for example, and then let something run. Me personally, I would probably have taken off like 50-60% at 3R here, and then let the other half of the position running for the highs here, right? So you see, this plays out of this range. We are disrespecting those fair value gaps, right? So we have again on the M5 a confirmation of a bullish order flow, right? As always, we determine order flow by how price is reacting to the PD arrays, right? Are we disrespecting bearish PD arrays, such in this case? Are we respecting the bullish PD arrays, like the propulsion block? And as you can see, we are respecting the bullish PD arrays, and we are disrespecting the bearish PD arrays, right? And we had here the run on this short-term low into the propulsion block, and then we saw the expansion here, right? So now we are about to open the New York session, right? And we also have news at 8:30 New York session, right? So you can expect some volatility there. Now ideally we don't see such a large retracement at the New York Open. Why? Because we have been seeing a retracement here and everything in this range is balanced. We might take out this short-term low here, but ideally we don't close then below this order block here. So we don't have to take out this low here, but it's a possibility that we get again the New York Open, a retracement out of the news, and then the open, low, high, close, and we see the expansion after the news at 8:30 are getting released, right? So we got a retracement here. We are now trading inside of this M5 fair value gap. If we go on the M15, you can see we also have a 15 fair value gap here, and also a propulsion block right here, right? But it's not really a high probability propulsion block because the body is relatively small compared to the wicks. So we could take out this short-term low and then move higher, as long as we respect this balanced price range here, right? So we have this M15 balanced price range. And as you can see, order flow is also leaving behind lots of low resistance liquidity highs, right? Low resistance highs, sorry. And this is ideally because then if we get news, and let's say news is back down a bit, and then we go up, this will be an easy run for price to take out the buy side here, right? So as you can see, we are now expanding up. You could add another short here, not short, sorry, another long here technically in this fair value gap here, but then in this case you would have to put your stops below the BPR at least, right? Because we can take out this short-term low, and then you can see your risk reward would only be 1.1, so it's not really a favorable setup, right? And as we are still having longs from here, some partials, right? Or even the entire position, depending on how you trade, how you manage your risk, how you take profits, right? Everyone has different preferences on how to take profits. And as I said, for me personally, I would have left like 40-50% of the position left open here and closed the first half here at 3R, right? So news get released right here. You can see we get spike down on the news release, and then we trade into the low resistance liquidity highs here you talked about, and also into the reclaimed bearish order block, right? So this was today's trading, right? And our trading should be done for this day, right? So now we again want to wait for the daily close, right? If price is maybe managing to close above the daily order block here, right? Then we can aim for higher prices. If price fails to do so, then we will look for eventually some shorts back down again to take out the Friday lows, right? But again, we will wait for the daily close first. And as you can see, we are getting rejected here now. We also disrespect this bullish H1 fair value gap. And now we keep consolidating here at the low and the lower half of this reclaimed bearish order block. And let's take a look at the H4. We can see that we also have a fair value gap aligning with this bearish order block here, right? So now, as mentioned, we wait for the daily close. There we go. We have the daily close right here, and as you can see, we are closing below the bearish order block here, right? So it's not really giving us a bullish confirmation to trade above and then use this as support to then go higher, right? We are closing below. So for now, as we are trading in a premium of this range here, right? We have this range, swing high, swing low, and we are trading in a premium at our higher time frame bearish PD array. We are more inclined to still see some either consolidation here or a retracement again, right? Also, if we take a look at the daily chart, right, where we have our daily dealing range, we have the swing low right here and the swing high right here. So we can take the swing points to again determine premium and discount levels, and you can see we have been trading into discount here for the first time, but again we can trade multiple times into the discount, and also this is a short-term low on the daily, right? So there will be lots of liquidity below. Also, we know it's a previous week's low and a Friday low, so we combine again price-based liquidity with time-based liquidity, and we can aim for shorts once we break below this fair value gap here again, right? We have this fair value gap here. If we get back below, we can then use this and look for shorts aiming for the low here, right? And the bullish scenario, as mentioned, would be a daily close above this level here, right? And then to look for longs for the equal highs on the daily here, right? So this is the game plan for the following days. And now we want to wait what Asia is doing, right? So with Asia session right here, we have been kind of consolidating, and now we want to wait for London. We have also those low resistance highs here, right? You can see none of those highs able to take out a previous high, so this is a low resistance liquidity run buy side, right? And now London is trading below Asia lows, but again we don't have a clear narrative nor a bias here, right? We are just consolidating here, so this is low probability conditions, right? We don't really have anything clear to take a trade based on, right? Obviously we are trading below Asia lows, below New York Open, and we have a short-term liquidity draw here, right? But again, we always want to trade based off the higher time frames, and in this case we don't really have that. So you can see how also price action is not really showing the willingness to displace here, right? We had the manipulation to the lows. We now also had a kinda a short-term change in order flow here, right? And we are now also having this M15 fair value gap here, right? Where price is trading in multiple times. And we now just want to tape read and see what price is doing, right? We also have news, or not news, we have Powell speaking at 9:30, and usually if Powell is speaking on a day, the price action before is oftentimes a consolidation profile or a retracement profile against the order flow, right? And price action is not really the best to trade. So knowing that, we have low probability conditions here, and we don't really want to engage with the markets yet, right? We want to see this placement to either get above the daily order block or to show this placement to the downside, to then confirm the drawn liquidity being the Friday lows, right? Or at least Monday's lows, right? We always want to put emphasis on the Monday range, and as you can see, we are currently trading above the Monday range, and we still have Monday lows being intact, and we also have equal lows here on the M15 chart, right? We have this swing low and the Monday lows, which are also London session lows. So again, we have price-based liquidity combined with the time-based liquidity, right? So for now, we are respecting this lower time frame bullish value gap, and we are now having the New York Open, and you can see ahead of New York Open we had the manipulation above the London and Asia highs, right? And then we got now displaced into the downside, and we also closed below the M15 fair value gap. So this is more bearish to me at this point. We are most likely to see a bearish continuation here, right? And you can see again how we use this former bullish value gap once we close below as an inversion level, and you see how price is retracing back up, using this as resistance and then selling off right into this swing low here, which is Tuesday's London low, right? So obviously you could have taken a trade here, but again, we are taking only high probability trades with the context of the higher time frames, and as mentioned, at this point we don't really have a clear picture, right? So now it's already too late in the day to take a trade here, and we want to wait for the daily close again to then frame a potential bias for the next day and then look for a trade maybe there, right? Wednesday daily close is right here, and if we look at the daily chart here, you can see that we closed below the fair value gap I've talked about on the previous daily close, right? We closed below, so now at this point we are most likely trading for Friday's lows, or at least for the 0.5 level of the wick of this Friday daily candle, right? So you may ask, why do I use the 0.5 level of a wick? So a quick explanation: if we take a daily candle, right? Let's say this is a daily candle right here, and then we have a relatively large wick to the downside, right, compared to the body. Let's say something like this. Then on the lower time frames, if we zoom into this wick of the candle, it will look something like this, right? We go down, make the low of the day, and then we go up where we close, right? So what does this remind you of, right? A balanced price range, right? We go down, go up, so all of this is balanced, and again, balanced price ranges. If we are bullish, right, we then should respect the upper half. So in this case, we want to use this as a potential TP area, right? So we want to say, okay, we will eventually maybe at least trade into the 0.5 level of this balanced price range, and then maybe get some reaction here, right? So this was a quick explanation of daily wicks and how you can use them to, you can sometimes even use them as a higher time frame PUI, right, if they align with your bias. In this case we use them as a draw on liquidity, right, and also we have a short-term low here, right, and we also have an imbalance right below. So again, price-based liquidity is a short-term low resting right above an imbalance, right. So we have Asia here, and as you can see, we had a trending Asia session. We have been trading down. We are now trading. We have taken out the Monday lows. We are still trading above those highs, lows here, but we have also left behind those low resistance highs right here, right, which are the overnight highs. So we have now two draws on liquidity, right. We have this entire range. We still have the range lows here where we aim for, but we also have internal range liquidity being those low resistance highs here, right. And if we take a look at the H4, you can also see that we have a small fair value gap right here, right. And on the H1 you can see we have the low resistance highs here, and we have this up close candle, right, so there's a propulsion block here, and this might be a continuation short P, right, after we take out the buy side to then aim for the sell side here, right, the Friday lows, and this low here as well, right. So we want to see if price is being able to push up here during the London session, right. So London session is about to open now, and you can see how we push to the upside, and we're now having equal highs consolidating here, and now we want to see price pushing through the equal highs into this H1 breakup block here, right, or not breakup, sorry, the propulsion block, right. And there we go. So again, can be short here. As I told you, I don't like to play New York reversals. They tend to be really choppy, or often simply they're not as fun to trade as a New York continuation. So if I want to play a reversal, I rather use the London session, but I don't like the New York session to trade reversals, right. And you can see we probably had some news here. Yeah, we had news at 8:30. Yeah, we actually had Powell speaking at 8:30, right, so you can see that's how we then got this placement lower and trade into this H1 fair value gap now here. And we've also taken out the lows which were created between London and Asia, right. So we have not taken any trade in the last 2 days. Again, just because you think you know where price is most likely heading to doesn't mean you have to take on a trade, right? Because it's getting harder to identify invalidation levels, to identify entries, right? And we have to stay patient and wait for our setup to occur, right? So we again wait for the first day candle close, and then we might try to look for a higher time frame PUI to look for shorts aiming for the Friday lows, right? So you can see daily close, we close here, so it's a really bearish close, and this will be now our next draw on liquidity here, right? And we also have this H1 fair value gap, which could act as an inversion level. And now we want to see basically we also have this H1 fair value gap here, this one, and we also have an up close candle here, right, this one. So price should not really go above. We could see a spike above this high, but ideally we respect this up close candle and we sell off from this fair value gap here. We have PD area alignment here, and we want to look now during London session if we can find an entry inside of this higher time frame or those higher time frame PD areas here, right? So Asia's trading into this fair value gap here, and we see a sell-off here, but we keep ranging here, right? So at this point we are expecting another raid of the Asian highs because we failed to displace here. And there we go, we have another raid of the Asian highs inside this H1 fair value gap, right? And we're also still trading in this H1 inversion fair value gap. So now we have a narrative here, right? We have the range here, the manipulation, and we now want to see London making distribution to the downside. We have a clear drawn liquidity. We have a higher time frame POI, which is the inversion level and the fair value gap, and as well the up close candle, the bearish order block, right? And now we want to wait and see if we can get displacement during London and then an entry, right? So again, we have a raid of Asia highs ahead of the Asian session, London session. So in this case, I want to wait for more for confirmation, because I told you earlier, London session rates or pre-London session rates can oftentimes get rated again at London Open. So if you want to see really a strong change in order flow or shift in order flow, to then short and not anticipate another run higher, right? So we have been dumping straight from London Open. We closed below all of those bullish fair value gaps here, right? We closed below this order block here, we closed below this order block, and we have seen displacement, and we also created this bearish fair value gap here, right? And you can see we have the bearish fair value gap on the sell side here, and we have also an inversion fair value gap here, which is this one, right? And it's aligning with that level, right? So we have PD array alignment, inversion level, normal PD array, the M15 fair value gap, and now I will put my limits at the fair value gap low, and then I will put my stop above the London, the pre-London session high, and then I will aim for the Friday lows, which is, if we TP right below it, a 2-hour trade, so it's inside of our rules, and obviously it's not 2-hour right here, but we can obviously aim for a few pips to price to trade below that. Maybe we'll move our stops to break even after we take out the Friday highs, and then we simply anticipate price to trade a bit lower to fill our TP here, right? So we got a fill here, and now again we have rated the Asian highs, lows here, and ideally now we want to see price immediately going lower. If we close above this fair value gap, I will cut my trade, but as long as we stay here, we are fine. So you can see we are still closing inside, we get the rejection, and now we want to see price expanding to the Friday lows. And there we go, we here have hit our TP, and we also hit our higher time frame liquidity target. So at this point we are no longer looking for trades for the week. The week is done here, right? We have traded into a higher time frame liquidity pool, which is the previous week's low. So at this point we expect either a consolidation or a reversal of this weekly trend, right? And we now want to wait for the weekly close, right? So we have a reversal of the entire move after taking out last week's low, and again we are trading again into this bullish order block, and we also have the weekly inversion fair value gap, which are the dashed lines here. So we've taken out the daily short-term low into our high time frame PUI, and now we want to see if we next week we can take out all of those highs here, right? We have this high, this high, this high, also the previous week's high here, right? And then ultimately we have the daily equal highs here, and our final higher time frame monthly target is obviously the swing high in the weekly volume imbalance, right? So in the next lection, the next episode, we will then talk about, or we then will see if we can frame long setups in the next week, aiming for the targets I just mentioned.